Hello everyone, this is Matthew Fraley, founder of BreakpointTrades.com. Founded it 22 years ago, way back in 2003, to provide the most advanced technical analysis, awesome market commentary, amazing trade ideas, and of course my passion, mechanical trading systems, which we have an absolute slew of. It's been about a week since I did a YouTube video. It's another reason to think about becoming a subscriber, because since that time we've had about 4 or 5 newsletters, etc. Again, the market's pretty much done what I stated last time. Last time I discussed that the NASDAQ was in a tight coil pattern, was likely to break out to the upside, which it has since last week. The S&P 500, I commented on this simple ABC correction that was reflexive, and we were looking for another upside move, which that's what we've been in so far. Appear to be in some sort of wave 3 at the moment. Gold has been very strong. Precious metals hasn't quite hit the 3,000 mark yet, but getting close. Anyway, got a lot to discuss, so let's go ahead and get started. This is our backend recorder for our website subscription service, which I'm going to start right now. Hello everyone, this is Matthew Fraley with BreakpointTrades.com. This is the Wednesday, February 19th newsletter. As you can see, newsletter is divided into 9 major sections. I don't have a bunch of text here tonight. Don't have time to write a bunch. Been dealing with a lot of technical issues today. But anyway, going to go ahead and get started here and look through the markets, etc. So first off, item number 2 shows the index sector table, what transpired today and this week. So as you can see, so far this week, it's been fairly small moves. Today, major indexes were up just slightly, anywhere from 0.1 to 0.25%. The Russell was slightly down. And as far as the market sectors here, sort of a mixture of up and down here. There's 21 various sectors we follow. More were up than we're down. Again, no huge moves here. You could see transports were down about 1.5% today. Oil services. Also some weakness in home builders, materials and mining, strength in healthcare, semiconductors, technology. Currencies, US dollar up 0.1% today, US dollar up 0.3% for the week. Bitcoin was up today, 0.75%, up slightly for the week. It's been lagging. As long as the market holds up, I think this could eventually start to play a little catch up. And as far as commodities, DBC, the index up 0.8% today, crude oil up 0.6%. Again, nice gains for the week. Like I said, the index up 2.3%, crude oil up 2.2%. Natural gas up 7.9% today, up 15% for the week. Why? The cold weather. That's the big things that natural gas moves on, especially. So, heck of a move there. And it's been remember we pointed out that trend change good month and a half ago when it finally held that 200-day moving average. Some weakness today in copper, uranium, agriculture, corn, wheat. Now, as far as the precious metals, they were kind of mixed here. Gold up slightly, silver slightly down. GDX, the miners, actually flat. Again, it's up for the week. Gold still hasn't hit that 3,000 round number. It's been getting close. It got up to 29.55. I think, or 60 recently. Didn't quite get there, but I still think that's ultimately a target. Silver's still stuck around the $33 range. And as far as the bond market, today, 10-year slightly down, 30-year slightly up. But for the week, the treasury yields are up, as you can see. Oh, and an admin comment, guys. I continue to make quite a bit of improvements to the high performance KISS systems. I'm going to be doing a video on that shortly and sending out to the subscribers of that. But I'm pretty excited the numbers I'm seeing. Again, I'll talk about that separately, but let's move on. Item number 3 shows the economic news calendar. So today we have the FOMC minutes. Tomorrow, Thursday, we have initial jobless claims. Philadelphia Fed, natural gas inventories later, oil inventories, and Chicago or S&P Global PMI. And so that'll be another thing the market will be taking a look at depending on how those numbers come out. Also, as far as earnings, we have Walmart tomorrow morning, and actually that's a pretty big one. So let's take a look at that. So the first chart here, item number 4, is Walmart. Now Walmart's earnings are tomorrow morning and they come out before the open. Now Walmart has had a heck of an uptrend, as you can see here. Recently had a nice tight coil here, which broke out in January, and it's had a nice move. So honestly, the risk is probably to the downside if you're holding into earnings. Now, if you have a really great entry way back here, or even maybe at the in the side of this coil, you have plenty of room to give it. But this is probably something I wouldn't be buying today, holding into earnings, just because it's had a pretty big run. This is going to be a potential market mover, so pay attention to this tomorrow morning. A lot of eyes will be on Walmart. And chart number 5, here's NVIDIA. Now, NVIDIA reports next week on February 26th. Clearly, it rallied and held that demand zone, which we pointed out well ahead of time. Recently stopping in a little downtrend line here, so we'll see how it reacts to earnings, but it's holding up well here for now. Some other earnings plays, like I said, most of the major companies have reported. Meta, as you know, reported a while back, way back in January 29th, so about 3 weeks ago. Heck of a move. Finally, the last couple of days, it's had a haircut. I was pointing out some negative divergence on the intraday time frames on Monday, and those finally played out in a big way. I said once it lost the 9 EMA, it was likely to test the 20, and that's what it's doing. Now, here's a pretty simple trick, guys. Whenever you've been holding that 9 EMA for a long time and you finally break it, you can almost always get a low risk buy right around that 20-day moving average, at least for an intraday bounce or a short-term bounce. All right. So it's trying to hold there. We'll see, but not surprised to see a little pullback. And chart number 7, here's the 2-hour view of Meta. And this is what I was pointing out. You have this really glaring, obvious MACD divergence. And you can see finally playing out for that nice pullback. All right. Whenever I see a stock that's stretched on the daily, I always zoom down to a 2-hour or 16-minute time frame. I want to look at that MACD and see if I see divergence or not. Okay, let's move to the major indexes. Chart number 8, here's the Dow. So the Dow, as you know, recently found support in the demand zone back in early January, which we had pointed out ahead of time. Rallied up, been stalling at that supply zone logically, but you have a very tight coil here. Energy is really building on this for a quick pop, likely to the upside. Chart number 9, here's the 2-hour view of, this is UDOW. That's the leveraged ETF. That's the 3X ETF, and I actually bought this. So I posted this the other day, but first off, just a little education. You can see that wedge low back in early January. It was a perfect A, B, C, D, E with that MACD divergence. Okay, then a really powerful rally up, and we've been in this consolidation. Now, this is the bullish labeling of the coil triangle, A, B, C, D, E. So true coils are 5 waves, and this would be the bullish labeling. Again, you could do a bearish labeling by shifting A up here, B, C, D, and an E, but for now, this looks like this is my favorite count. So this is quite of a low risk trade because you could have a very tight stop just below that uptrend, that lower trend line. So we'll see if this puppy can pop out. You can see how tightly the moving average ribbon is as well. Next, moving on to the S&P 500 chart. So chart number 10, here's the S&P 500 KISS system. This is the daily high performance system. Obviously no changes. System had a little whipsaw back in early January, then went back long, and it's been long since for the last few weeks. Again, no changes here. Next, moving back to the standard chart, chart number 11, here's the daily S&P. So again, just a couple things. Remember, we filled that gap back in January. We bounced off that demand zone, okay, rallied up. We took out a downtrend line, made a new high at 61.28, had a perfect 3-wave ABC pullback. I said to watch for support at that extended trend line, which is exactly where it bounced off of. Yet another educational thing I always say, whenever you draw a trend line, once price finally breaks through it, don't ignore the trend line. Extend it out, because many times you'll retest it, and that's exactly what it did. That was a low risk trade. Anyway, price has been chopping around there, but finally took out this little downtrend line last Friday, and we're moving higher. Here, Steve added a demand zone, so we get a quick pullback. This is now a support area. Next, number 12, here's the half-day chart that I discussed last week in the YouTube video. So again, remember, we were always favoring that pullback into January as a wave 4. We said this area was a line in the sand, needed to hold for a bullish count, which it clearly did. Then I mentioned this next higher low at 59.23 was your line in the sand, which held. Now I got another line in the sand pretty much right here at 6,000. So we're now moving up in this wave 5. Next, number 13, here's a 2-hour view. You could also have drawn this as a coil pattern, which broke out here just recently. And chart number 14, here's a 60-minute view. So the chart I was discussing last week, just absolute textbook. 5 waves up here in late January. Then a perfect 3-wave A, B, C pullback. Remember, A, B, C pullbacks are your friend in an uptrend, right? Now, what we didn't know at the time is if C would go a little deeper, get into this gap, or be a little more complex. But it ended up just simply being a 3-wave ABC pullback, line in the sand there. Rallied up as a wave 1, higher low wave 2. That was yet another low risk entry. Stop could have moved up to there. And now we appear to be in some sort of wave 3. Chart number 15, here's a 30-minute view. Just showing some recent action here. Took out some recent resistance. There's a demand zone down here if we get a pullback, etc. Next, chart number 16, here's the NASDAQ, triple Qs, high performance system. So this also went back along in early February after that quick whipsaw. Yesterday, smart trailing stop moved up from 505.67 to 518.50. So nice to see that come up. Next. Chart number 17, here's the standard daily triple Qs. Again, nice rally up. We favored that low in January as a wave 4, and we're working on this wave 5 currently. There's also a demand zone down here as a support. Chart number 18, here's a 2-hour view. Obviously, we broke out of that coil last week. And chart number 19, here's a 60-minute view. Coil last week was clearly broken. Here, Steve added some fibs. Again, should the market go higher tomorrow morning, these will have to be adjusted. There is a little MACD divergence here, so if we pull back right away, here's some fibs to monitor. 23.6 fib at 536.40, 38% fib at 533.66. And finally, chart number 20, here's IWM small caps. They continue to lag, right? So still hoping these can start powering up a little bit when the major indexes continue higher. Moving average ribbon's really tight, as you can see, but it's been chopping around here. If you're long, I would put a stop at one of these higher lows at this point. And chart number 21, here's a 2-hour view. You can see some coiling-like action, so we'll see what this does. All right, that does it for the indexes. Let's move on. Chart number 22, here's the VIX. As you know, the VIX has been really, the volatility has been quite low here for the last several weeks, and the Bollinger Bands continue to get tighter and tighter. We want to keep an eye on that because eventually we're going to have a violent move out of here, likely whenever this uptrend's finally over. So just be aware the energy is building on the VIX. Chart number 23, here's the 60-minute view of the VIX. Remember, the VIX loves to fill these gaps, even more so than the indexes, I think. But anyway, VIX has been bouncing off these demand zones, honestly, since late January and even just recently. Here it's pulled back a little bit today into a demand zone. There was an open gap here this morning, which essentially filled. All right. We'll see, guys. You know, we could get a pop here again from the VIX. All right. Or if the market really powers higher, there's an unfilled open gap way down here in the low 13s. Next, chart number 24, here's the 10-year Treasury yield. After making that high in early January, been chopping around here lately. You can see the 20 and 50 moving averages are coming together. Moving average ribbons pinched. Chart number 25, here's high yield corporate, which continues to hold up well. Kind of wedging, but it's still holding up. And remember, the market S&P tends to be highly correlated with this. So as long as this is uptrending, things are okay. Next, moving on just to look at a few market sectors. Just going to cover a few. So here's semiconductors. I said last week we needed to see the semiconductors start rallying and coming out of this base, and that's exactly what has been happening. You can see finally, after holding this demand zone stubbornly in late January and early February, It was chopping around. You can see all the moving averages. You have the 200-day, 50-day, 20-day, 9. We're all just bunched up here. Looks very sloppy, quite honestly. And finally cleared that out a few days ago, and it's been moving up. So that's a positive for the market. Next, number 27, here's XLK Technology, also new high. Here I had a little sloping uptrend line just as a resistance marker. Number 28, here's financials. They continue to hold up as well. Number 29, transports, pulling back today, kind of in a coiling action. Number 30, XLU, continues to meander higher, as you can see. And finally, chart number 31, XLE Energy. So far, remember that a couple weeks ago, price tested that 61.8 fib, and I said that was a good area to go long with a tight stop. Well, it's been choppy, but it's held that, and price has moved up nicely. Energy area is one of my top sectors for this year. Chart number 32, here's yen. That's the Chinese ETF, the 3x leveraged. And boy, this had a hell of a percentage of move. So again, you had 5 waves down, A, B, C, D, E, into the January low. Hell of a move up. From 23 to 42.50, one hell of a percentage move. Getting a little bit toppy here short term because it's had a heck of a move. But congrats if you rode some of that. Chart number 33, here's BABA. BABA has been, trying to think of a good term, but boy, what a heck of a move out of that wedge pattern. You can see just was absolute textbook. Wedge with MACD divergence. That is your best combination. MACD divergence goes along amazingly with wedges. And also, remember, this is a perfect 5-wave wedge. 1, 2, 3, 4, 5, or A, B, C, D, E. Okay. Anyway, quite overbought here. You could see yesterday the black candle doji, very wide moving average ribbons, overbought RSI. So, this could use a mean reversion pullback, at least to maybe the 9 EMA. Chart number 34, here's EDC. That's the leveraged ETF for emerging markets. This is also at a nice move off of those early January divergent lows. Pulling back here a little bit, but it is uptrending nicely and above the 200-day moving average. Next, moving on to commodities, chart number 35, DBC. Now, this is the weekly chart, up 2.3%. It's trying to break out of this weekly range. That's important because I said I think commodities could have a fairly big year. And the chart I don't have tonight is the DBC SPY ratio, which is something we want to keep an eye on. Next, chart number 36, here's the daily chart of DBC. Remember this resistance area where it pulled back recently, but I said likely to retest it and eventually break it, and it's starting to do that now. Again, I think this area looks pretty fantastic, and we could eventually see commodities start to outperform the S&P, where you'd want to be more overweight them. Again, I don't have that ratio here tonight, but I'll show that next time. Next, chart number 37, here's crude oil. Little bounce today off the highs. So far, it's been trying to bounce off this demand zone that I pointed out recently. That recent low at 70.1 did have some RSI divergence. Chart number 38, UNG, natural gas. Power move today up 7.9%. But look at this rally. And again, the trend change occurred back in December when it finally broke and held the 200-day moving average. Okay. Then you had an amazing opportunity to buy that retest of the 50-day moving average right here. I did. Now, unfortunately, like a dummy, I sold it around here. I should have kept the damn thing. So now it's just going absolutely gangbusters. And especially with the cold weather. It's been like 5 degrees here where I'm at near St. Louis, Missouri. Next, chart number 39, copper. Remember, this broke out a few weeks out of that coil pattern, pulling back a little bit this week so far, down 2.2%. Chart number 40, here's FCX at the copper stock. This did break the channel. Now, guys, since it broke the channel, watch this pullback. You could get a low risk buy down around this on a retest of this trend line with a tight stop. Chart number 41, DBA. This thing continues moving higher. It's down today. It is getting a bit stretched here. It's had a heck of a run since the August pullback lows. Next, chart number 42, here's Bitcoin. It's been stuck in this range. Kind of has a head and shoulder, complex head and shoulder, rounded top look, so that does concern me. But if the market indexes still go higher for a little while, maybe this will finally start to play a little bit of catch up. This area here, this demand zone, is super important, okay? Because below here, this area where you got these big solid up candles really represents a big air pocket, really no support here. So eventually when it breaks this, it could easily fall to the low 70,000 range. That'll likely occur on the next market correction. When the market finally tops out on the wave 5, Bitcoin will likely follow. But for now, just kind of chopping around here. Next, chart 43, here's US dollar. Remember, lost that pattern finally. The highs in early January had a very obvious MACD divergence, as you can see here, which we pointed out. So, little bounce here the last few days, but kind of has a bear flag look to it. That'll help gold, perhaps. Chart 44, here's gold. So, gold, here's yet another coil. And like I said, absolute perfect 5 waves. A, B, C, D, E. All right. So, anyway, recent high hit $2,968. So, still shy of that big 3,000 round number, which I keep telling you is a target. And I gave a price target of 3,000 way back last March, April. So if you go back and listen to my newsletters then, that was one of my targets for gold. I think it's going to go much higher than 3,000 over time, but initially, short term, that's my target. Right now, it's kind of trying to flag here. Chart 45, here's the daily ETF GLD. And chart 46, here's gold on the weekly again. Heck of a move out of this really nice basing pattern for the last year plus. We're currently working on this wave 5. There is a little RSI divergence and MACD divergence here at the moment to be aware of. That doesn't mean it's a sell right now, but again, likely we need to tag this 3,000 number. I'm also seeing some Fib projections for some other folks that give targets around 3,200, so that could also be a potential target. But then I think eventually gold is going to need to pull back, especially if it ends with this MACD divergence. Next, chart 47, here's silver, which was slightly down today. You know, it's broken out of this coil. It held that demand zone in December there. But, you know, it hasn't been really running away. It's definitely been lagging relative to gold. So I do think silver is going to have its day, but right now it's just kind of choppy. And chart 48, here's SLV. That's the silver ETF. So you can see these horizontal lines have been previous resistance and support. Last week we broke that trend line, retested it, bounced off a demand zone. Right now we have sort of a 3-wave, maybe a coil formation. And chart 49, here's the monthly chart. Like I said, we're still in this big supply zone that goes all the way back to 2012. But again, over time, I think silver, even though it's been choppy here lately, yes, it's had a nice move since last year from the February-March area after it broke that monthly coil. But eventually, I think it's going to go up to these much higher levels. Chart 50, here's GDX, the miners. So again, another great example of a perfect ABC pullback into demand zone, which held. Big rally up. Now, to me, this looks like a wave 3. This is a very powerful wave. You can see it's pulled off the supply zone logically, but I'd be looking to buy this pullback. Now, if it pulls back more here, if it gets down to the 20 moving average here, if it loses that 9 EMA, I think this would be an excellent buy for yet another push higher. Could form a little cup and handle here, perhaps, with a little pullback on an eventual breakout. Chart 51, here's the 2-hour review of GDX. Early this week, I pointed out this very obvious MACD divergence here, said it looked a little toppy, and so far it's pulled back a little bit. Following up on some individual names I put out in the precious metals area for the mining stocks, here's AEM. I put this out over a month ago. Beautiful coil pattern move. And I talked about it last year back in February and March at this much larger coil, which obviously had a hell of a move. Essentially doubled since then. Chart 53, here's the daily chart of AEM. Again, you can see the coil here, the move up. And to me, this appears to be flagging. So I would be watching for yet another rally on this one. Jabber 54, here's KGC, another one that broke out of this range, pulling back, and this is one that may try to find support again and rally up. Jabber 55, here's FSM, it's a silver stock. Now, unfortunately, this one got hammered on earnings, okay? So it tested this resistance area. You could see it basically hit 550, which was 2 cents shy of that previous high at 552, and then sold off. It's now into a demand zone, so we'll see if it can find some support in here. But again, this is earnings induced. All right, guys, moving on to the final part of the newsletter, some of our trade ideas. So here, Jabber 56's cart had a cup and handle. I put this out about 2 weeks ago. And if you've had patience, because it's been pretty choppy here, it's finally starting to play out here. So I bought it back in here, and I've simply ignored this noise, and it's now working out. Jabber's 57. XERS, long idea from yesterday, kind of a cup and handle breakout. Broke out today on expanding volume. Jabber 58, Intel. Remember over a month ago, I pointed out this demand zone that went all the way back to 2012 and 13. Well, nice rally there. So for the month, it's up 32%. This is an excellent buy in that demand zone. Again, Intel has its share of problems, but that's why it's fallen from $62 in 2021 down to $18. So to me, it was worth a shot in this weekly demand zone. Jabber 59, here's the daily chart. On the daily, you had a beautiful low risk. I went long back in here in early February. But look at all this. Look how strong this support was. 1, 2, 3, 4, 5 touches. So this is a super low risk long. Huge move. Now, yesterday had a big pop. Today gave a lot of the backs. Hopefully took some profits yesterday, but I still think this will be bought on a pullback. Jabber 60, here's AMD, yet another one that's had a heck of a correction really since last year. Essentially been cut in half, but it's in a weekly demand zone, which I pointed out last week. So could have been worth a shot there, and it's moved up a little bit since. Some other names, Jabber 61, LNZA, long idea from Steve last night. Over this 1.07 area. Again, it's a little low price stock, speculative thing. It's just a trade. Don't marry it. Jabber 62, CXM. Another little stock here. Resistance is at 950. That was from Steve last night. And here's some new ones. Jabber 63, CELH. I like this basing, this kind of a basing downtrend channel here. Big, massive volume today. Watch your moving average ribbon starting to pinch a bit. This looks pretty good. Jabber at 64, STEM. Here's another one. Kind of has a similar chart to CELH. Nice downtrend channel. Broke that channel today on a gap on expanding volume. This is a breakaway gap. These are one of these gaps you can chase. These are bullish gaps. Next, Jabber 65, ATYR. Another one. This one popped today hard. But I still think this could follow through over today's highs for a trade. Jabber 66, CRL. This is one that's coming off a MACD divergent low. Nice volume today. Notice I drew the line here. So a trade over today's highs over 166.45 could give you a trade maybe to the 50-day moving average. And the final chart, Jabber 67, VKTX, some sort of pharmaceuticals name. Again, I'm just looking at the chart. I don't know anything about it fundamentally. It's been downtrending here for a while, but notice the MACD divergent low, volume pickup. Could maybe get a quick pop out of this bottoming formation, divergent low to that 50-day moving average. All right, guys, that'll do it. We'll see what happens tomorrow and the rest of the week. Quick check on futures. ES futures are down about 14 points tonight. So a little pullback, and gold is up 16. Okay, have a wonderful evening. Take care.